2025 is going to be an interesting year to watch out for from a political perspective, global markets, Indian markets et al. But first, let me welcome in Pankaj Pandey, Head Research at ICICI Direct, to understand from him what should the strategy be for 2025. Pankaj, good afternoon and welcome to the show, and wishing you a happy 2025 in advance.
Yeah, hi, good afternoon. Thanks for having me. I wish all the listeners a very happy new year.
Pankaj, talking about 2024 as a year, it's been an interesting year, a roller coaster ride, but still, we've managed to end with gains of almost 9 to 10% on the benchmarks and almost a 25 to 26% kind of returns in terms of broader markets. Getting into 2025, a lot of events that we should be watching out for. What is your view in terms of the markets, and what is it that will lead that?
So yes, 2024 has been pretty good year for almost all the asset classes. We've seen gold rallying about 19 odd percent. Equities, especially the large caps, did about 10% kind of a return. Although they have lost half of the gains post September, the mid caps and small caps still did very well at 25%. Debt was up about 10 odd percent, and real estate also did very well with a gain of about 15-20 odd percent. You rightly mentioned that 2024 was quite an eventful year. We had geopolitical tensions, and then we had number of state elections plus central elections domestically. Then I think globally also you had a lot of elections in key geographies. So overall, see, the expectation was a 12% kind of earning growth in 2025 or FY25. And against that, because of the elections and also because of extended monsoon or the overall uncertainty, I think what we are going to get is a earning growth of about 7 odd percent. And we've seen that markets usually sort of trend the line of where the earning growth lies. So 2025, the earnings got impacted, but our sense is that 2000 FY26 or 2025 calendar year is going to be pretty normal, especially from a political perspective, largely because you'll have only two elections. One is Delhi, and then you'll have Bihar towards the end of the year. So overall sense is that the earnings is going to recover in 2025 to about 15% CAGR, and which is why we would expect Nifty to trade about 28,000 kind of a level. So we have a target of 28,300 for 2025 for Nifty.
Right, so 25,000. So that's an interesting 28,000 levels is what you're watching out for in terms of markets. Taking your view on the markets, do you think then the current correction that we've seen is a good entry point for investors? And if so, what are the sectors that you're pegging?
So yes, I think we've seen a good amount of correction in the market of late, and our sense is that when the earnings sort of normalizes in the second half, you'll have themes like capital expenditure and infrastructure, which are going to sort of play out for the entire 2025. Then I think there is a premiumization which is already going on, because you understand this from 2021 onwards till now. The household wealth in equities has gone up from say 58 lakh crores to about 138 lakh crores. So roughly a gain of an incremental gain of 80 lakh crores. Now, obviously, that will give or that will create a wealth effect, and which is already visible in when you look at the premium segment of the market, be it real estate, be it autos, or be it the hospitality segment, sort of doing very well. So that is a trend which we expect to sort of sustain. And then there is a financialization of savings which is happening, or equitization of savings, if I can say. And that is another trend which we feel should benefit. And then I think from a global perspective, the CRDMO or the CRAMS as a space is looking as a very interesting opportunity, irrespective of the fact that whether the Biosecure Act gets passed in the US or not, because there is a need for a diversification of the value chain or the supply chain, which is felt globally. And Indian companies are expected to sort of benefit. And our recommendations are typically from all these themes which we have identified.
Okay, this is Rucha joining in. One question on valuations. Looking at what kind of rally the Indian markets have made in last 1 year, don't you think valuations is a bit of a concern going ahead in CY25?
Well, I think when you look at last, say, 20, 25 years, US market has been one of the best performing markets. And lastly, while there has been earning growth, but part of the gains have also come from the expansion in multiples. And our sense is that structurally, Indian markets are also placed in a similar direction. Understand this, US market had a 20-year bull run from 1980 to 2000, largely because the household equities there jumped from nearly 10 odd percent to 38 odd percent. Uh, I- if you look at our markets, this is the ninth year where we are sort of closing with a positive gain. And our household savings from 9%, it has gone up to 29 odd percent. So, and this year we have seen that while there has been sort of concerns in terms of multiples being higher, but I think what we also need to understand that the dynamics or the composition of the index itself is changing towards high growth names, which are typically more expensive compared to the traditional oriented names. And in fact, we have seen the FI positioning also sort of changing. So while FIs have sold about 1.2 lakh crores domestically, what they have sort of had exposure towards is capital goods, healthcare kind of a names. So I think the overall texture of the market is changing, and I think with the domestic inflows largely expected to remain intact, we would want to believe that Indian market is also in a sort of a structural bull run.
So yes, Indian market is in a structural bull run. But Pankaj, you mentioned a couple of themes that you should be watching out for in terms of 2025. Let's break that up. First, you're talking about Capex beneficiaries. Absolutely, the union budget becomes crucial to understand what the spends will look like and whether we will see a pickup in infrastructure or not. And then the kind of impact that cement and steel companies could have. Uh, Key things you're watching out for, and what are your topics in that space?
So 2019-20, we again had an election year, and subsequently in the second half, we have seen the capex picking up. So we are sensing that we will see a capex pickup in the second half, and probably not to the 100% kind of a achievement, but 93% of the overall 11.1 lakh crore kind of a capex. And from there on, you will see capex moving in the range of nominal GDP growth rate, with capex to GDP pegged at about 3.4, 3.5 odd percent. Beneficiaries again would be a big company like L&T. They already have order book of about 5 lakh crores, and order pipeline is about 8 lakh crores. And overall revenue and bottom line growth is expected to be about 15 odd percent. And the good part also is that they're becoming more capital efficient. So there is a focus on ROE. They have achieved 16% and expected to achieve 18 odd percent. So that is our one of the picks. The other is the Techno Electric. Their target price is 1920. Now this company is in a power infrastructure space. So be it power generation, transmission, distribution, smart meters, or new age data center, I think this company has got a fairly good order book. And overall sense is that the order book will become better in the second half. And there is a consistency we expect, especially in segments like, say, smart meter, or for example, other segments like T&D. So that will help this company to deliver about 35% kind of earnings. And this is our second pick. And since we expect road capex to sort of pick up, so KNR is one of the best road plays. Beside that, they've got exposure on the water side. So that is another company. This is one of the few companies which has been very capital efficient in terms of maintaining their sanctity of margins. And our sense is that this company is expected to sort of bag a good amount of orders in the second half. And even the development on the AP and Telangana should fetch, or the pipeline there is pretty good in terms of order inflows. So that is another company which we like, with a target price of 390. And within the infrastructure space, last but not the least is Ramco Cement. I think Cement had one of the worst years, and Ramco Cement has expanded, or has been expanding their capacity. They are further looking to sort of expand their capacity by 6 million tons. So they'll be touching about 30 odd million tons. That should help them deliver a volume growth of about 8 odd percent. And EBITDA per ton, since the prices started to sort of improve in bits and pieces. So our sense is that even the EBITDA per ton will move from 800 to, say, 1,000 rupees per ton. And this is trading below the replacement cost at about $105 EV per ton. So from that perspective, this is another stock which we like, with a target price of 1180.
Right. All right, Pankaj, moving on to your next theme is premiumization-led consumption, and under this you've mentioned the sectors like auto, hotels, real estate, etc. But let's particularly talk about auto as well. You've mentioned that premiumization is likely to drive this industry, and also you like key beneficiaries like Mahindra and Mahindra, Eicher Motors. So what's your take on our previous guest actually mentioned about how two-wheeler could take over the other segments. So what's your take on two-wheeler and the four-wheeler industry in calendar year 25?
So two-wheelers have already done well this year, the entire spectrum of the market. But I think on the auto or on the PV side, clearly the SUV as a segment is doing phenomenally well. And while the overall industry guidance is 5 to 6% kind of a growth rate on the PV, I think the SUV segment can clock 15-16% kind of a growth, and which is where Mahindra is topping the charts. And they've got a fairly aggressive capex of 27,000 odd crores, so their lineup is quite good. The other big segment for them is tractors. So tractor, while the first half there wasn't much of a growth, the second half is where we would expect closer to double-digit kind of a growth. And so from that perspective, in the PV, if you look at there are a number of levers or bigger levers which are playing. So in terms of premium segments, you look at the alloy wheels is becoming a standard segment. Similarly, panoramic sunroof is becoming a standard segment. Then you have ADAS level 1 and level 2 becoming a sort of a standard feature for most of the new products. And Mahindra is at the forefront of all of this. And which is why I feel that the recent correction in the Mahindra stock is an opportunity to buy with a target price of 3600.
3,600 on an M&M. Pankaj, real estate is another sector that you are betting big on, but with the run-up that we've already seen in 2024, how would you advise to play this sector? Because clearly the anticipation is now that supply is expected to remain high versus demand, and the demand will be capped by higher pricing. How do you expect that entire gamut to play out, and what would your top picks then be?
So in real estate, what you're clearly seeing is the premium end of the market, whether you call it at a price point about 2.5 crores or 4 crores and above. And that is the segment where the volume growth has been there, the pricing growth has been pretty good. And which is why you see companies like Oberoi or Brigade making new highs. So I think in real estate, the market is yet not sort of broadened or is not broad-based. What is clearly doing well is the premium end of the market. And that is expected to sort of keep doing well because, see, of the overall real estate market, the organized players are still contributing about 20%. And possibly with rate cuts this year, then that is where probably the overall other segments of the market could sort of do well. At this point in time, we are focusing more on the tier one names. But yes, like you rightly pointed out, we have seen rallies or the stocks have rallied quite significantly. So which is why we are still not recommending, but any kind of a correction, we will continue to like the premium segment of the market more than the mass segment or the economy segment.
Right. Pankaj, I know you've spoken about defense broadly, but I just wanted to focus on your particular picks in the defense space because a lot of the names have already run up. So do you think this is the good time to enter into them, and which ones?
So in real estate, structurally, we would want to believe that the acceptance of necessity has been given to projects worth about 8 lakh crores, and there is a potential for nearly 12 to 13 lakh crore worth of orders which will come out in the next 4-5 years. And again, big beneficiary again would be
Can you
players
button in?
like it.
Yeah.
Big,
Pankaj, actually, my question was largely around the defense space.
Yeah, so what we like in the defense space is something like HAL because while we are still sort of struggling with the 4.5 generation aircraft, I think the opportunity pie or the kind of competition what you're getting from peers is significantly high. So we would expect that company to sort of do very well. And electronics as a component is increasing across, and which is why Bharat Electronics. And then you'll have tier two players like say Astra Microwave is what we would like. And Midhani, to some extent, is where when the engine manufacturing happens or the localization in manufacturing starts to sort of increase. So that is where I think this stock will benefit.
Right. So Mishra Dhatu as well as HAL, two stocks that you should be watching out for. Pankaj, very lastly, your topics coming in from the pharma space and the BFSI space. What are your topics if you have to look at 2025?
So in the BFSI, asset quality concerns are there. Which is why we are recommending AMCs. AMCs is something where you are not carrying any kind of a balance sheet risk. And AMC's AUM can keep on growing at the overall earning growth, if not for the price appreciation. So Aditya Birla AMC is what we have been liking with a target price of 985. We have already recommended Nippon and SDFC AMC earlier, so which is why I'm not repeating this. The other is on the Biosecure Act. We would expect Piramal Pharma to sort of do very well. They're guiding for 13% kind of a growth with 25% kind of a margin. So this is one company which should do well with a target price of 320. And Narayana within the hospital space looks very good to us. I think second half you'll see the Cayman Island expansion coming in, and that will start contributing to numbers. And this company is taking one of the most aggressive capex of 3,000 odd crores, which is the one of the most aggressive capex which we've seen from this company in the past 10 years. So this is another company which we like with a target price of 1,600.